Time for Money Tuesday. We're entering yet another political season, and oftentimes that can affect your wallets, but also your 401ks. And joining us this morning to help you navigate some of that, Marshall Clay with the Welsh Group. Good to see you this morning.
Hey, good to see you, Mike.
We got a lot of stuff happening, world events. I know a lot of investors are uneasy, but for people who have 401ks, there are some things they need to keep in mind.
Yeah, absolutely. And I think there's always a lot of press coverage around these events. And I think there's typically a knee-jerk reaction in the capital markets to the downside, at least in the very short term. But there was a recent Reuters research study that looked at 29 of the most significant geopolitical events dating back to World War II. And the results were actually kind of staggering, that over a 1 month period of time, the market was actually up 63% of the time. Over 6 months, 66% of the time. And over a 1 year period following these geopolitical events, it was the market was up 83% of the time. So these geopolitical events that often cause a very short-term negative reaction are oftentimes a buying opportunity.
So really, yeah, and so you really shouldn't try to predict this, because that's where you can run it or time it so you can get in trouble with that. And for people who don't know, tell them what you mean by a buying opportunity.
So what I mean is, when you have a short-term move in the market, say the market sells off very violently on headlines, right? It's not really based on fundamentals of companies and how much goods and services they're selling. It's pure headline risk to the downside. Oftentimes when that headline risk sort of fades away, all roads ultimately lead back to the fundamentals. So if that initial fear is typically unfounded, that's often going to lead to a near-term bond.
So in terms of strategy, if somebody needs short-term cash or they want long-term growth, what should they be thinking about?
Right. So I mentioned 83%. So you may say, well, Marshall, what about the other 17% of the time? And so I think that's always, when you have to look at your time horizon. So certainly if you're somebody who's in retirement or on the verge of retirement, if you're concerned about these events, or if these events really get you emotionally, you certainly want to have enough fixed income, really safe instruments set aside to facilitate your cash flow needs. So right now, for example, there's some great opportunities in money market mutual funds that are paying north of 5% that are essentially risk-free. So you want to make sure that there's a piece of that in your portfolio. But if you have a longer term time horizon, if you're 20, 30 years old, you really shouldn't allow these short-term political events to really control how you invest your money.
Certainly a good time to reevaluate where you are, especially before the year is up. Marshall Clay with the Welsh Group, thank you so much. Appreciate it.
You're welcome.
All right, still ahead now. Today is Halloween.